Hello and welcome to this Wednesday's morning market briefing. We've got a lot to talk about, but firstly, Bitcoin's price does pass the $69,000 a Bitcoin mark to hit a record high. So as that, China sets ambitious 5% growth target, which flags risks to economy as well. We've got lots to talk about in the charts also, with lots happening on the economic calendar, but we'll come to that near the end, so of course make sure you stay around so you can see that. Before we get straight into it though, make sure to subscribe. The first article to talk about is on the topic of Bitcoin. Now, Bitcoin has now reached and surpassed all-time highs, trading at $69,200 per Bitcoin. This surge in prices follows the SEC recently approving a series of Bitcoin ETF applications submitted by the likes of Fidelity and BlackRock. Now, we've spoken about Bitcoin many times recently, maybe not as many times or as, interest rates or that kind of thing. But ultimately, Bitcoin's kind of been a very interesting topic of discussion recently as a result of what we just talked about, really, which is, the SEC approving on those Bitcoin ETF applications, which, the SEC had really been holding off on for a long time, kind of pushing back. And ultimately, when we came to the point where, those Bitcoin ETFs were approved, the price for Bitcoin had been inflated so much. So, the price kind of felt very overvalued already at the time, considering that we had, come out from last year where price was, all the prices was all the way down, around 30,000, 20,000. So, significant gains as a result of kind of speculation around that Bitcoin ETF applications kind of process. And then we did see, the SEC kind of approve of those applications, and with great volatility, we saw price spiking up and down, but ultimately we did see a sell-off as a result of that event, which surprised many and kind of, paused the markets for a moment as, these bullish Bitcoin investors did kind of take a step back for a second and think about their position within Bitcoin and what the trajectory was for Bitcoin in the future. And despite that sell-off though, since then we've actually seen an uptick in Bitcoin's price by quite some bit, with cryptocurrencies rising on a whole and Bitcoin just skyrocketing from those levels. And if we go back to what I did say when we did first see this sell-off following the Bitcoin ETFs being approved, I did say how the reason why we were seeing those sell-offs is because it enabled certain investors to kind of get out. It was a way that they could kind of cash out on their investments when they felt they wanted to. But ultimately, that was a very short-term move. And I kind of noted how that didn't really change any of the previous speculations on Bitcoin or any of the kind of opinions or pieces of data which had kind of influenced people's opinions into being very bullish on Bitcoin. So I said that, whilst we have seen this sell-off, this is more of a short-term move, and in the long run, this is just a move which is basically making it cheaper for people to get in now and then, ride the rise to the top. And that is really what we have seen. Whilst we have seen Bitcoin's price kind of stop at some points, have some periods of like accumulation, distribution and range and that kind of thing, as we just saw like basically yesterday and the day before. Ultimately, Bitcoin's price is on the upswing, and there's a great deal of upward potential really for the price still. Ultimately, we have only started to see Bitcoin's price rise following the more dovish comments from the Fed, so maybe that's something to think about. Often we kind of drag Bitcoin into its own world within markets, but obviously it is an asset which still is influenced by external factors such as interest rates. And when we did start to see the Fed basically lax more in its rhetoric in relation to interest rates and kind of talk more about cutting rates rather than raising them further, that's when we really did see this uptick in Bitcoin. So that's something that's always important to take into mind, but other than that, where we can go from here, that's for the markets to decide really. It is crazy though to see that we have broken, those record highs in such a short period of time. I mean, watching the markets every day, it is very odd to see how fast Bitcoin has risen, and as we'll get into this article, that is causing some caution, some worries by certain investors, but ultimately, as a result of the new flow of capital following the SEC's approval of Bitcoin applications, ETF applications, there's been a 60% gain for Bitcoin since the start of 2024. Since breaking all-time highs, however, prices fallen greatly, reaching all the way down to $59,500 a Bitcoin, and that's what we'll come to on the charts after all of this. So wait around till you can see that when we can analyze Bitcoin's charts. Now, since the Bitcoin ETFs have been approved, more than $7.5 billion worth of capital has flowed into the new Bitcoin ETFs. This moment of making new highs for the cryptocurrency has shocked some who saw the crypto bubble as popped when it reached a low of $16,000 per Bitcoin following the FTX collapse, and that obviously came at the time where Sam Bankman-Fried was kind of taken into custody basically for fraud, and we do know now that he has been sentenced and that kind of thing, but I believe trials may still be ongoing, but I'm not sure about that. Keep your eyes on that kind of thing. Next month, an update to Bitcoin's network called Bitcoin halving is to take place in order to slow the circulation of available coins, which is influencing many to have a very bullish outlook on the cryptocurrency. The recent bullish run, however, has prompted some concerns from traders who worry that the bull run is at a far too dramatic pace, and thus the cryptocurrency activity is now being compared to the bull run in 2021, which was fueled by a wave of retail excitement. Despite the current bull run for Bitcoin, liquidity is still lacking, with data provided by CC Data showing liquidity on the top 21 exchanges still lags behind last year's levels. So that's also very important to note, and something that I think you should all be keeping your eyes on is liquidity levels at a time like this, where obviously price is rising greatly. That's all to talk about in this article, though. Next article to talk about is to do with China, and a very interesting article indeed, as China has now set out the economic growth target of 5% this year, with this coming at a time where the Chinese economy struggles with issues in the property sector as a result of weak investor confidence. Now, this, of course, is a very important article to note, and any news in regards to China is always so important to highlight, and this is largely because, of course, China is the second largest economy of the world. I think most Western supply production lines basically relies on China in some sense, and ultimately we have seen a rise in global tensions recently, especially between the US and China, especially in relation to trade. So talking about China is always so important to understand US equities more, to gain a better picture on gold. As we know, Chinese investors have struggled with the property crisis recently, and lacking investor confidence they have moved basically into investing into gold and that kind of thing, which has pushed gold higher. So all these things make China a very important topic to kind of talk about, and obviously any political news in regards to China is also super important. But here we are talking about China's economy, which we know has been struggling recently, just as a result of coming out of the period of COVID, which of course messed up many economies and caused a great deal of stagnation. But with the Chinese economy, it seems to have really affected supply chains, basically their production industries, as well as their property sector, which most just everyday individuals rely on for their investments. So all of this is so important, of course, to highlight. Now, in President Xi Jinping's number two speech, Premier Li Qiang, presented a budget deficit target in line with last year's and offered special government bonds to disappointed investors who had hoped for a larger spending boost by the government into the economy. And that is what we did talk about last year, actually a while back now, when we were talking about the issue within the property sector of China. And we were also talking about how, the Chinese government was kind of thinking about dealing with this issue. And, increasing government spending was one of the ideas floated. We know that they did implement some spending boosts, but not too much, and that is what investors are a bit upset with. Now, investors are now watching this year's meetings of the National People's Congress to see how Xi plans to tackle the slowing economy. Last year's speech also set out the growth target of 5%, which was the lowest in years. This year, Li's address went on for an hour, touching on plans with local government debt, the property sector, as well as policies to improve the lagging birth rate, which might not affect the economy immediately, but definitely is something that's always important to note in regards to these nations with certain birth rate issues. Li put up the budget deficit target at 3% of GDP and offered $138.9 billion in ultra long-term special central government bonds, which would provide extra support for the economy. Beijing's military budget will also increase 7.2%, matching last year's rise. So, very important things in regards to China to note. And of course, anything in relation to the Chinese economy greatly affects the world. So keep your eyes on all things China as well. That's all to talk about in this article and the articles as a whole. Next to talk about, of course, is the charts. Well, we have so much happening today, a great deal of volatility as we highlighted in the first article, but we've also got lots happening on US equities, gold, pound yen, Bitcoin and oil. So we'll get through all of this most certainly. Now, to begin with, we are on US indices where we have seen a sell-off yesterday as prices did roll off from the level which we did see price kind of stagnate around. And this, of course, is very interesting to kind of note and look at because, we didn't have too much US data coming out yesterday or kind of Fed officials speaking or that kind of thing. So this sell-off is quite interesting to note. And, it does seem like price has reacted to this liquidity zone, or at least has used this liquidity zone as a method, as a way to kind of move to the downside. And that is kind of seemingly what we have. What has taken place. What is interesting to note, though, is how price has now spiked into this liquidity level. If we note this out, it kind of takes this all-time high for the US 30 and maps that out to the right, including many other areas where prices spiked down into it. And currently, it does seem like price has spiked into it and will use this area of liquidity to now swing a bit to the upside. What we could see now, though, is a kind of reversal with price continuing to the downside. And now we're just kind of waiting, I guess, for that short-term retracement before a continuation to the downside. If we were to see that kind of move take place, I think, the levels which are most to note will probably be the 38.20, the 50% more importantly, and then the 61.80, as that 50% does line up with some very key areas on the chart. So, it would be very feasible for price to roll off from that area. So keep your eyes on the US 30 most definitely. There's some very interesting positions that you could be taking, or at least some very interesting thoughts which you should be taking into account as well. Next to talk about, though, is the dollar. Where not much is happening. This is kind of one of the assets at the moment, or currencies, I guess, which we're not seeing much movement on recently. We are getting, of course, the US NFP figure this week, so that's always important to note. We do see a great deal of movement when we do get the NFP figure. Of course, that brings a great deal of volatility for the dollar and the US equities and other kind of US related assets. So definitely keep your eyes on that figure this Friday. But as for now, it doesn't seem like we're seeing much movement on the dollar. That could always change, though. On Euro USD, of course, also being a pair with the dollar, we're not seeing much movement either, and that's despite a great deal of Eurozone data that we did get yesterday in regards to Eurozone services inflation and services figures. And make sure to research that. I don't have time to kind of put that into today's briefing, but that was an interesting piece of data a great deal of data actually that we got yesterday, which is very important to note in regards to the euro. And it does seem like price is still staying around this liquidity zone, which has been hovering around for quite some time now and reacting to. So keep your eyes on Euro USD. Lastly, to talk about for the pairs, though, the Forex pairs is pound yen, which has just been respecting these key areas of liquidity greatly recently. And as for the most interesting moves at the moment, price is kind of interacting with this lower level of liquidity, which has previously acted as a support, as a baseline for a head and shoulders pattern that we did see form over here, and then ended up serving as a bit of resistance when price was on the upswing, and is now seemingly serving as a bit of a support for price as it does interact on the downside. So very interesting price action on pound yen at the moment. What will be interesting to see though is whether now price does make its way back up to this liquidity level, which price did interact with yesterday. So keep your eyes on pound yen. Next to talk about though is Bitcoin, which obviously that being the first article that we did talk about today. So we've already kind of covered Bitcoin. This is the price action that we were actually talking about. So yesterday we saw a great deal of momentum on Bitcoin as it did reach those all-time highs at midnight, but then throughout all of yesterday basically we just saw a great deal of bearish momentum before. Whilst we were seeing that bearish momentum though, we did see price kind of spike up quickly to the upside, which did make those all-time highs, and I'm sure did take out many stop losses for those that were trying to short that move to the downside, where and that kind of does kind of paint the picture that those were institutions trying to get in on the short run to the downside and were kind of taking price to the upside to take out those sell orders, and therefore kind of gain the liquidity they needed. Now price is on the move to the downside on the day. That said, we are now seeing a retracement to the upside from this liquidity zone and 50% Fibonacci level. So if we did take the the Fibonacci retracement tool and map it from the bottom of this upswing to the very top of this upswing, that 50% does line up in the middle of it, of course, and that's what price did come down and interact with yesterday, and now we are seeing that move away from it. So maybe that was just a retracement and now we're going to continue to the upside, or we could be seeing a reversal take place on Bitcoin, so keep your eyes on that, of course. Next to talk about is gold, which is now reaching all-time highs, very, very near the all-time highs where we did see price spike to not too long ago. But how legitimate that is as an all-time high, but when we did see that, this is for you to decide really. Ultimately though, price is moving sustainably to the upside, which I think is the important thing to note. We're not seeing any bearish divergences form on the RSI, and it's just an overwhelming amount of bullish momentum to note for gold. And this is obviously being influenced by many factors, including Chinese investors looking for other areas to put their money in. That's what to talk about on gold. Lastly, to talk about on the charts is oil. Not too much to say on oil, apart from the fact that we are now tapping this 61.8% Fibonacci retracement level, which also is kind of a short-term liquidity zone as well. So maybe we'll see a continuation to the upside now. That said, we've moved back into this range now, so it's hard to kind of judge where oil could go. That's all to talk about in the charts. So lastly to talk about, of course, is the economic calendar, and we're getting a lot of data today, so make sure to listen out for all of this. Firstly, we will be getting the Aussie GDP growth rate figure, followed by the German balance of trade figure and the Eurozone retail sales data, as well as Eurozone retail sales data, as well as that we're getting the US mortgage applications data, as well as British spring budget speech. So of course a very important piece of British data today to note, as well as that we're getting some US employment data, followed by the Bank of Canada making their interest rate decision public, and also having a press conference. So listen out for that as well. Most importantly, though, we will have the Fed chair Jerome Powell testify. I don't know whether that's a word, but he will be doing a testimony today. So listen out for that to hear some signals in regards to US monetary policy. And finally, we are getting quite a few Fed officials speaking today as well. That's all to talk about in the economic calendar, though. We've covered lots in the articles, lots on the charts, and lots on the economic calendar. Hope you have a great trading day, but that's all from us at Wildwood Capital. Have a great one. See you later. Bye.